questions. Will you recommend the Job Guide 360 interview guide to prospective job seekers?
Sure, I will. The guide is detailed and very comprehensive.
Welcome to the deep dive. Today, we're diving into a career path that really requires this kind of dual mindset. You need the precision of a financial analyst, but also the finesse, really, of a dedicated client advisor. We are, of course, talking about the mortgage broker.
Yeah, it's definitely a field where, well, the margins can be tight, can't they? Regulations are complex, sometimes incredibly so. And at the end of the day, the real measure is helping someone make, possibly the biggest purchase of their life.
Exactly.
So to really understand what makes a successful broker, we've pulled together a curated stack of critical interview questions. These questions really act like a map, right? They show you the core competencies employers are looking for.
Right. So our mission today is basically to dissect this toolkit. We want to get beyond just the facts a broker memorizes and into the strategic thinking, the emotional intelligence they need to actually thrive. The material describes this role as, well, challenging but also rewarding, demanding financial acumen, adaptability, and definitely that client-centric service focus. So we're going to look at what seem to be the 6 pillars of competency these questions are trying to measure.
And I think if you can nail these 6 areas, you've really built the foundation for a pretty high-level career in lending.
Okay, let's unpack this then. Let's jump straight into kind of the bedrock. We have to start with technical mastery, right? Because you can't advise anyone if you don't know the mechanic.
Exactly. You've got to know your stuff. And the first demand is product diversity. I mean, a broker who can only handle, say, standard conventional loans, they're severely limited in who they can actually help.
Yeah, and the source material, it drills right down here. It asks candidates about their experience with a variety of mortgage products. They're really looking for breadth, aren't they?
Oh, absolutely. Yeah. The broker needs to be fluent in conventional loans, your standard, typically non-government backed ones, but also FHA loans, VA loans, jumbo loans. And the key isn't just spitting out definitions, it's the application.
Right.
It's about matching a client's specific financial picture. Things like their down payment ability, maybe their military service history, matching that to the correct set of guidelines and qualifications for each loan type.
So it's knowing those nuances. Like, why specifically would a broker maybe steer a client towards an FHA loan, the government-insured one, instead of a conventional?
Well, the main reason is usually accessibility. FHA loans generally allow for lower credit scores and smaller down payments too, sometimes as low as, 3.5%?
Wow, yeah.
Which is critical for first-time buyers maybe, or people whose credit isn't quite perfect. And then conversely, you've got VA loans exclusive to veterans and active military, often zero down payment, really competitive rates. The broker absolutely has to know these specifics to unlock those kinds of opportunities for their client.
That makes total sense. Okay, so knowing the toolbox is step 1. Step 2, and this often feels more intimidating, is knowing the rules of the road, because the products are kind of useless if they don't meet the regulatory standards.
And that takes us straight into regulatory compliance, which is just, non-negotiable in this industry. Question 4 in our source material hits this hard understanding underwriting guidelines, the regulations that dictate if a loan is actually, fundable.
And what's really interesting here is the specificity. It's not just some vague idea of compliance. The material actually names the 2 big regulating bodies a broker must be intimately familiar with, Fannie Mae and Freddie Mac.
Right. And it's important to remember these aren't actually government offices. They're government-sponsored enterprises, GSEs. They basically set the rules for what makes a mortgage safe and sellable, so it can be packaged up and traded on the secondary market.
Oh, okay.
So if a broker messes up and doesn't make sure a loan meets Fannie or Freddie's standards, well, that loan is often dead in the water, or at least it's going to be much more expensive and carry more risk.
So for you, the listener, the key thing here is that Fannie and Freddie basically standardize the whole lending world. A broker needs to know their rule book, like inside and out, because pretty much every lender they work with is trying to package loans to meet the requirements of one of those agencies.
Precisely. If they don't grasp those complex requirements, they just can't guarantee the loan will get final approval. And that's a huge waste of everybody's time and money. So you see, the necessity of being both a product expert and a deep institutional expert, that's really the bar set by these initial questions.
Right, that definitely sets the technical baseline. But, a broker's job goes way beyond just compliance manuals. They're also strategists, right? Operating in a market that's constantly shifting. Which brings us to how they navigate that market.
Yeah, if technical knowledge is the foundation, market awareness is kind of like the roof. The second core question we looked at tackles how a broker stays current, because lending rules, rates, products, they can change dramatically, sometimes quarter to quarter.
So how are they expected to do it? It sounds like it requires real proactivity.
It does. The expectation is they're attending industry events, reading the relevant publications, and maybe most critically, regularly reviewing updates directly from government agencies and, importantly, the specific lending institutions they partner with.
It sounds like an ongoing commitment, really.
Oh, absolutely. Think about a time when interest rates are moving fast, like they have recently. A broker who hasn't checked the latest bulletins might recommend a product that was great last month, but is totally uncompetitive now.
Or they might miss something new.
Exactly. They might miss a new niche product some regional bank just launched, designed for a very specific type of borrower. Staying current really is staying competitive.
Okay, now here's where it gets really interesting for me. Because that market knowledge leads right into the client's strategic needs. So you know the products, you know the rules, you know the market trends. How do you pull all of that together to figure out the best long-term loan option for a specific client? That's what question 3 seems to dig into.
And the assessment there, it has to be genuinely holistic. I mean, yeah, it absolutely starts with the basics. Income stability, credit score, assets you can verify. But honestly, that's just qualification. The real value a broker brings is advisory.
Which means thinking about the client's future, right? Like, are they planning to stay in this house for the next 20 years, or do they think they might sell in, say, 3 to 5? That changes everything.
It absolutely does. If a client knows they're likely moving relatively soon, maybe a broker suggests an adjustable rate mortgage, an ARM, one that offers a lower initial rate for the first few years.
Okay.
But that same ARM could be, well, a potentially toxic recommendation for a family planning to retire in that home. They probably need the stability of a 30-year fixed rate, almost regardless of what the market's doing right now.
But doesn't this bring up a really critical point? I mean, brokers typically work on commission, so they're incentivized to close the deal now. How do these questions gauge whether a broker genuinely prioritizes the client's 5-year plan over their own paycheck this month?
That tension. That's exactly why this is a deep dive question, not just a multiple choice thing. The answer, I think, lies in demonstrating that you lead with the client's stated goals, showing how you translated their long-term intentions, maybe saving for college, or reducing monthly payments into the actual features of the loan product you recommended. The best brokers, they frame their advice not just as a transaction, but as future-proofing a major financial decision for the client.
That totally reframes the job, doesn't it? It moves it away from just transactional sales, more towards almost a fiduciary style of advising.
Exactly. The goal alignment dictates the terms. That's the key.
Okay, so we've hit the technical skills, the strategy skills. Now let's talk about that moment when things inevitably go sideways, which, let's face it, with the complexity of documents and the market, probably happens reasonably often. The sources smartly include a question designed to gauge resilience, real-world problem solving, using a specific scenario.
Yeah, this is where resourcefulness gets tested. Question 5 asks directly for an anecdote. Tell me about a time you handled a particularly challenging loan application. They want to see how you troubleshoot when the standard path just doesn't work.
In the sample answer that was provided in the material, it details a really common but very sticky obstacle. A client who had both a low credit score and a high debt-to-income ratio, that DTI.
Right, and that DTI ratio is so crucial to understand. It's that metric measuring a borrower's total monthly debt payments against their gross monthly income. And when that ratio is too high, it just screams risk to standard lenders. They often hit the brakes immediately, almost regardless of the client's actual income level. So yeah, handling that dual risk client, low credit and high DTI, that sounds like a recipe for instant rejection usually.
It definitely does for most big institutional banks. So what did the broker in this scenario do? They couldn't magically change the client's past credit history or their current expenses overnight.
No, the solution wasn't hiding in the standard product list. The broker had to leverage their network. They found a specialized lender, sometimes called a niche lender, someone who specifically worked with borrowers in that kind of unique, tricky situation. Maybe a lender who does more manual underwriting or looks at alternative documentation.
Ah, okay.
And they were ultimately able to get the loan secured for the client. And critically, the example says it was at a competitive rate. considering the circumstances.
That anecdote, it just brilliantly highlights the value of that broker's network, doesn't it? It proves they know the whole landscape well enough to connect these niche clients with niche lenders. Like, the average person might know the top 5 banks. The real specialist knows the 62nd player down the list who handles the tough cases.
That is the essential trait right there. Resourcefulness built on deep market relationships. And that leads us perfectly into the final pillar we identified: collaboration. Because the broker isn't operating in a vacuum, are they? They're really the central hub of a much bigger wheel.
Yeah, that's question 6. Working effectively with others. The broker needs experience, real experience, collaborating smoothly with all the other industry pros involved.
And that network is pretty broad. It includes real estate agents, of course, home inspectors, appraisers. Think about the potential friction points there for a second.
Oh, yeah.
The real estate agent wants a fast closing. The appraiser has to make sure the home's value actually supports the loan amount. The home inspector might suddenly introduce expensive repair requirements. All these people, they often have slightly different priorities.
So the broker isn't just good with numbers. They have to be the chief communicator, managing expectations, juggling deadlines, navigating potentially conflicting interests.
Exactly right. The source material really emphasizes that good communication is absolutely key to a smooth, successful transaction. If the appraiser's valuation comes in low, maybe creating a gap between the agreed sales price and the loan. The broker has to immediately communicate that to the agent, to the client, and start working collaboratively on a solution.
Like renegotiating the price, maybe, or adjusting the loan structure.
Precisely. Renegotiate, adjust the loan, maybe find additional funds, whatever it takes.
Yeah.
Without that constant coordination, that constant communication, the whole client experience can just fall apart, even if the initial loan calculation was perfect.
Wow. Okay, so when we put all 6 of these pillars together, what does it all mean? Success as a mortgage broker clearly isn't just about passing a licensing exam or knowing some formulas. It requires that deep technical compliance with giants like Fannie Mae and Freddie Mac, market awareness, strategic intelligence to really future-proof a client's finances, and those crucial collaboration skills to manage a whole team of external professionals effectively.
And if we connect this to the bigger picture, for you, the listener, these competencies are pretty universal across the lending world, aren't they?
Yeah.
Financial acumen, understanding regulatory compliance, aligning with client goals. These 6 skills are essential whether you're dealing with a standard home mortgage or something much more complex.
Absolutely. You could probably apply this exact framework to a bunch of roles across the financial sector.
Which actually brings us neatly to a final thought based on some related job titles mentioned in the sources. The material listed things like agricultural loan officer, commercial lender, and banking services officer.
Right. So here's something to think about. If a broker truly excels at all 6 of these critical skills we've discussed, product knowledge, regulation mastery, market awareness, goal assessment, that specialized problem solving, and collaboration, which of those related roles, ag lender, commercial lender, banking officer, might represent the most difficult intellectual jump?
Yeah, think about how the client goals might shift dramatically, or how the regulatory frameworks could be completely different between residential housing and, say, financing a huge commercial real estate deal. Or maybe a really complex agricultural operation with seasonal income and unique assets.
It's definitely something interesting to ponder, reflecting on these core pillars of lending success. Well, we hope this deep dive into the sources gives you the knowledge to feel well-informed and ready to tackle whatever financial conversation comes your way next.